Inflation is ongoing and it doesn't seem to slow down anytime soon, and the Feds are trying to hike up the interest rates again and again in a hope to bring down the inflation. But that seems to take some time. Although everyone seems to know about this whole inflation scenario, but not many people exactly know how does this fluctuations in interest rates affect other markets such as stock market, crypto market and housing market. So today in this video, we're going to explore the effect of interest rate fluctuations in these markets, and before we dive right in, a subscription to the channel would be so great as it will motivate me to come up with much interesting ideas. So let's start by understanding what is inflation and how does increasing interest rates helps to bring down the inflation. So inflation is by definition a general increase in the prices of goods and services in an economy. So basically in an economy, the supply and demand for goods should be balanced in order to maintain a good health. But when the demand exceeds over the supply of goods, that companies tend to increase the price of their products, and that is how inflation happens. But the consequence of this inflation is it lowers the purchasing power of money, and each unit of money can now buy fewer goods and services than before, and that is not a good thing. So what is the solution? Well, the solution is to decrease the demand for goods, and interest rates is the tool for the government to do this. The way this works is, when interest rates are increased by central banks, the short-term borrowing cost for financial institutions also increases, and this affects both consumers and companies. As cost for borrowing for financial institutions increases, they charge more money to lend money to consumers, and that means borrowing interest rates and mortgage rates also increases. So consumers will end up spending less money in the economy. As people ends up with less money, they spend less on discretionary things and tend to spend mostly on necessary things. And so does the overall demand decreases. And that is the reason why the Fed keeps increasing the interest rates, as the inflation does not seem to cool down anytime soon. So now let's talk about how this inflation affects the housing market. As said earlier, increasing the interest rates result in increase in mortgage rates. So most people rely on mortgages to buy their homes. So people will step back from buying homes at this time, since they will end up paying more money on mortgages when the interest rates are high. So the demand for houses decreases, and so does the prices of houses as well. So overall, the interest rates has an inverse relationship with the housing market. When one goes up, the other goes down. So now let's check out how the fluctuations in interest rates affect the stock market. So basically, stock market relies on the performance of companies and businesses. We know from the previous sections that when interest rates are increased, people will end up with less money, and less money means less spending on goods and services. So the overall performance and revenue of businesses will fall during this time. When a company is seen cutting back on its growth or is less profitable either due to huge debts or less revenue, the estimated amount of future cash flows will drop, and this lowers the price of the company's stock. If enough companies experience declines in their stock prices, the whole market or the key indexes many people equate with the market, like Dow Jones Industrial Average, S&P 500, etc., will go down. So stock market also has the same relationship with the interest rates as housing markets. When interest rates go up, stock markets go down. Now is the time to find out how crypto is affected with interest rates. Well, the price of the crypto is also linked to the interest rates in a similar manner of that of stock and housing markets. The crypto market is totally ruled by sentiments, and when people have less money to spend and the banks are offering more return on savings, then people will move away from riskier equities and invest on more safer bets. So overall, the demand for crypto decreases, and so does the prices goes down as well. And we can also see these trends going in the opposite direction when the central banks are reducing their interest rates. That is the time when these markets flourish, but for now, it's totally a winter season. So I hope you guys got a little bit of idea how these markets works and fluctuates based on the current interest rates. If you enjoyed this video, please hit the like button and subscribe to this channel for more interesting videos on crypto, finance and NFT. See you later.